Hello family, NjokaFx here. I'm so excited coming to the chart again to give you another breakdown of trade on Euro USD on Thursday, the 22nd of December 2022. We are getting to the end of the year, so trade cautiously. Don't allow your money, don't give back your money to the market during this season. So enjoy yourself, take withdraw and enjoy yourself. Okay, so I'm going to show you how the trade, how you should have taken this beautiful trade and how you should have managed the trade, to give you an example on how I look at the market and when it takes me out, what I do. I'm going to show you my stop loss, my entries, my exits. Getting into the chart, before I continue, can you imagine I've been recording for the past 30 minutes and my mic wasn't on? I finished everything and I discovered my mic wasn't on. Can you imagine it? So, but let's go into the chart and let's get it popping for you. Let me get it popping for you guys. All right, so getting into Euro USD on Thursday, before taking my trade, I want to give you one important tip. You need to do a top-down analysis, whether from monthly, weekly, daily to a lower time frame before you take your trade, so that you can know the direction in which the market is likely to flow. Okay, so as I previously said in my previous video, the market, we are in a ranging consolidating market, okay, on Euro USD, most pairs actually, Euro USD, GbpUsd. All right, so let me just give a small recap on how you can go from higher time frame to lower time frame analysis. All right, a breakdown on the weekly. Let me start on the weekly. You can start on any time frame. Okay, oh, what's this? All right, this is another video I did. All right, okay, coming on weekly, you discover that for the past 2 years, we have, for the almost 1.5 years, almost 2 years, we have been in a downtrend from 2021. Just imagine 2021 right here, January 4th 2021, giving us a double top towards May, a double top for a long downtrend. All right, downtrend. The whole of this year was basically a downtrend. So those who have been taking trades in this direction made a lot of money. So they're trying to do some correction maybe before continue downward. We don't know. The market can decide to give us just this as our V bottom and just move back, way correction to take liquidity up here. Okay, so that is how the market moves. All right, so right now, for the past 2 years, we have been in a downtrend, so it's very easy to identify such trades. We have like double top here, lower lows, lower highs, lower lows, lower highs, just like that. Okay, so coming to the market, I just look like previous months maybe, then I say, okay, we have a downtrend here, downtrend that broke at this particular point with the body. So that's, and we are in an uptrend. We are from a downtrend, now we are in an uptrend. That's a very simple for you to know we are in an uptrend. Just draw like that, we are in an uptrend. Just draw a trend line and that is it. All right, just same as I did here. All right, on the daily, it becomes much more clearer. All right, much more clearer. Breaking this trend line, we can see we had a break of structure here. Where is it? All right, not the break of structure. You save as that break of structure. All right, let me put it at the center. Break of market structure, then give us a tweezer top with a reversal for another break of structure here. for another break of structure here. So we now know 2 breaks of structure tells us that we are confirmed in an uptrend. So any trade you take from this particular moment should be directing you in an uptrend. Okay, any reversal, you take the trade. Any reversal, you take the trade. Especially like here, for example, you have, let me just say here, lower lows, higher highs. Like here, you take the trade, you write on, take the trade, write on, take the trade, write on. Then let's see what's going to happen here. Okay, so knowing that we are in an uptrend, so the thing is, we just on the daily we are in an uptrend. So I don't take trades on dailies. There are those who do that. Dapo Willis does that, and others. Okay, 4 hours, I don't even take trades on 4 hours. You can see we have been breaking, after breaking this structure here, after breaking this last structure, we have basically been in a consolidative market. As you can see, we have been consolidating for the past how many days now. All right, so right now, go directly to maybe my 1 hour, no, my 15 minutes. That's where I mostly take my trade. I do my analysis after knowing my direction of the trade. So as I told you, we are in a consolidating market, and I told you in my previous video, we are in a consolidating market. So their strategy, you have to know how your strategy works, and you have to trade according to that strategy. Here is the support, and here is our resistance. All right, you make sure that it touches as many points up as possible. All right, you have one touch here, reversal, 1 2 3 4, 1 2 3 4. So this one is stronger. All right, so we are in a consolidating market. Knowing that, then you now know how you can now position your trades. All right, you have to know when to trade in a ranging market. You have to know when it is a trending market, and you trade according to that. All right, so that's being said, coming into the chart, knowing that we're in a consolidating market, so any chart pattern, candlestick pattern that I see at this extremes end, I take it upon myself to actually study it. Either I take the trade or I let it go. All right, so coming into the market at Asian, what do I see? I see this small consolidation here. It breaks, and it breaks this high, breaks this high. And before I continue, on the daily, when I'm coming to the chart, my previous day, which is this, I mark it. Yeah, my previous day's high, previous day's low. Okay, I go now on the lower time frame. I adjust my lines. I adjust them. Previous day's low. Okay, so those are areas where when it breaks, I begin to start looking for trades. All right, previous day high, previous day low. I set my alert and I wait. Okay, this happens all the time when I'm trading. I set my alert and I wait. Breaking out of this consolidation at the Asian session. Let me go to 15 minutes immediately. I will need to do this video fast so that I will not waste a lot of time. At the gap time, after the Asian session, I discovered that we already made, from the consolidation, we already made one push, 2, 3, 4 pushes to the high, breaking, because here is where Asian broke. our previous day's high. All right, we have 1, 2, 3, 4 pushes, and before getting to the fourth push from this doji here, we have 1, 2, 3 pushes, pin, hammer, engulfment, and my entry. Okay, here's my entry. Here's my entry. And at the same time, what gave more confluence, another confluence, is 3 peaks, 1, 2, 3 peaks to the high of the previous day. Okay, 3 peaks to the high, peak 1, peak 2, peak 3. Okay, then it went ahead to break the structure. Okay, so I entered here, so as it was moving, first candle bearish, second candle bearish, third candle closed as a doji. All right, closes as a doji. It shouldn't, according to my strategy, it should not close as a doji at this particular time. When I see something like this, I start adjusting my stop loss. I start making sure that everything and my capital is protected. So I put it at break even. That is what we call risk management, managing your trade. I put it at break even, and it did what? It took me out. No problem. I'm not ready to give out more money. Okay, just imagine I left this, it would have taken out my money at this point. Okay, see, so you have to be very careful when you take a trade. You have to know the signs, the candlesticks, how the candlesticks are behaving. All right, you have to understand where is it behaving, at what time, what period. Okay, so now I want to tell you something. I told you previously that I trade within the 12 candle window, which is 12 a.m. 2 a.m. to 5 a.m., which is my London session time. Okay, all credit goes to these guys, Stacyberg and ICT. Okay, I got this from them. I knew nothing about the market. I just came and I was introduced to these things, and these guys, I learned this from them. Time and price. All this thing is about time and price. Why do I say time and price? Price and time. All right, so look at this. We have the push start from Asian, the end of Asian session. 1 push, 2 push, 3 push, breaking the previous day's high with 1, 2, 3 pin hammer with an engulfment. Then beginning of our first candle, 2 a.m. London session time, beginning, it gives us a trade. On a normal circumstances, normal day, this trade would have been a very, very beautiful trade. But notwithstanding, we are in December and the market does what it does best, hunts liquidity and gives you trades and so on. So just imagine price, time and price, 2 a.m. That is when my entry occurred. That's it. Entered, then it did not fulfill the move. All right, then after that happened, I left the chart, coming back, reviewing my trade, which is something you should do. Reviewing my trade, I discovered that on the 5 minute, it still gave us another entry on the 5 minute. After taking us out at this particular point here, this candle here, 255, it came down, gave us a 1, 2, 3 pin bar engulfment at the 00. This is 5 minute. This is not at the 00 level. This is at the 40 level, giving us a 1, 2, 3 engulfment. Still a beautiful trade. If somebody would have taken this, still a beautiful trade. A 1 to 2 or maybe a 1 to 1.5 thereabout. Put your stop here. Then that's a 1 to 3. Oh my God! Down here for conservative traders. That's 1 to 2, 1 to 2.5. 2.2. Okay, so coming to the chart, looking at the chart again, I discovered that on the 5 minute, it still gave us a 1, 2, 3 pin engulfment, which is this. Okay, which is this. At this particular time, to be honest with you guys, at this particular point here, if I see something like this at 1 to 2 in a December period like this, I put my stop at break even. All right, I don't want to lose any more money. That's the secret of keeping your capital during December. On a normal days, I leave it either to hit my stop or to go to take profit. Like as you can see, on a normal day, you'll have gotten to my take profit, which is here, which is not here because of those relative equal lows. Like here, here's a target. Let me just put this. Here is a target. Okay, so the 1 to 5. Okay, so getting here, after giving me to this point, I will have put a break even and it will have taken me out. All right, no problem. I didn't lose money, so I don't have to cry about anything. All right, so that was a trade, and that is how you should have managed your trade, and it gave a beautiful 1, 2, 5, and it's still consolidating at this level, just to tell you how this area is strong enough to hold price. Okay, so that is it, guys. A 1, 2, 3 push, 1, 2, 3 pin bar engulfment. Take your trade. Takes you out at break even. You still have the opportunity. Take the next trade. Okay, as long as it fulfills your planned strategy. Okay, you take the trade, then you allow it ride on. All right. So that was it, family. As I always say, may the market go with you. Plan your trade and trade your plan. All right, see you in the next video. Peace out.